Welcome, everyone, to this little presentation about Enersize. As you can see, my photo is up there. I'm chairman of Enersize. I'm sitting over in Sweden, so working in the Malmö-Lund region. Enersize as a company is located in Finland. And there we have Sami Mykkänen, who is the CEO of Enersize. And I work as an executive chairman, so I'm involved in the direct operations of the company as well. So I work business development, strategy, technology, whereas Sami works with customers, especially in China. We'll get more to that later. And he's also managing the whole operation. So, compressed air efficiency. Who knows what the compressed air system is here and here? The 2, 3, 4 hands. Well, that's not much. So you're going to know a lot more once we're finished here. So, let's go on. Well, industrial compressed air. You can find compressed air in trucks and stuff like that also, but we're now talking industrial compressed air, what is used in manufacturing plants all over the world. Actually, 90% of all plants, so it's everywhere. Every iPhone you have in your hand has been using compressed air to manufacture it. It's a really bad thing, actually. It uses a lot of energy. It solves a lot of problematic engineering problems when it comes to manufacturing industry, but it's really, really bad. If you replace an electric motor with a compressed air motor, that's about 20 times more efficient. The electric motor is 20 times more efficient. So it consumes about 5% of the global electricity, which is a huge number. It's a huge number. And it goes into the market size. I mean, the cost, I don't know even, it's lots of zeros. That's all you need to know, because it's a gigantic market. And it's a very fragmented market. There is a lot of small local players. There is no one taking a big scope, a holistic view on this one. And this is what we do. And by doing that, we can go down and save a lot of energy. Up to 20 to 30% of the energy in these systems can be saved with the Enersize technology. I will explain more about this later. And as I said before, it's a really bad, it's very low efficiency compared to electric drives, for example. And we do a lot of our business in China. We're very proud of that, because China, the carbon dioxide emissions in China is much, much bigger than in the rest of Europe. Or, for example, Sweden is very low due to a lot of water power. Denmark as well, a lot of wind power. So we are there. It's something I'm proud of, that we save a lot of energy where it matters most. But it's also a very good business deal. China has the biggest factories in the world. It's the manufacturing mecca. So by being there, we really have the perfect market for what we're doing. A little bit of our history. Enersize started in 2010 as an Internet of Things, collect industrial data to make energy efficiency projects. That proved a little bit too wide. By accident, more or less, they went into compressed air and realized that nobody else is doing this. Nobody else in the whole world is using Internet of Things, advanced analysis to make savings in compressed air systems. And by another accident, we started doing our business in China. Finland has a long business relation with China. They do a lot of there. It's quite close when you go from Helsinki with plane to China. Much closer than you think. So basically, they had a tough time. We had a restructuring period. We went out of that and started, actually, when Sami came on board as CEO, we started to get contracts. During 2016, a lot happened. We got bigger contracts. We got with Photon, big vehicle manufacturer in China. We got our BOE, Beijing Optoelectronics, the world's third largest flat screen manufacturer. We had the first small factory of them, and we started, actually we got the first payment last year from them, about 300,000 euro, first payment for the first year of savings. And then things have really started rolling. So from November to here, we signed 5 new installation contracts with big Chinese plants. And some of them are follow-up plants on the other ones. I will go more into detail about that later. We did a pre-IPO round here at December, January, where we got 2 new really interesting owners into the company, as well as some strategic investors for the planned IPO. And that is Scania, the well-known Swedish truck manufacturer, part of Volkswagen Group, They went into us, the first investment they did in their new investment vehicle, Scania Growth Capital, where they invest in smart factories and smart vehicles. So it's perfect fit for us and a perfect network for us, perfect test partner for us. Dürr, not so well known, but they actually have 70% of the global market share for painting systems for the vehicle industry. And it's the supervisory chairman of Dürr, Heinz Dürr himself, who has invested personally. And he knows almost all the big car manufacturers, CEOs by first name. So it's great strategic partners for us that come into this. We also increased the sales pipeline very much during 2016, and that is what is showing now. We are also aiming for an IPO this spring, summer. So we'll get into that a little bit more later. So what we do today, I talked about the Chinese project, and that's one of our legs we're standing on. That's kind of the old leg, where we will grow that profitable. That's the plan, to have these big factories where we go into with our unique business model with revenue sharing. And we will continue work that. But from the position where we are now, we have seen that there is nobody else doing this on the market. And with my background, we have also seen that we can start utilizing Internet of Things in a total new way, where we can have a lot more sensors. So many sensors that a human being couldn't realize what's happening, but a computer can. And bringing in artificial intelligence, we can automate these systems. And that gives us a lot of benefits. Today we go into the project, we have our Internet of Things system, we analyze the system, and our experts say, let's do this, let's do that. By automating the expert, suddenly we can take this software product and give it to distributors all over the world, who can go to their customers. And they can go to smaller factories where it's not financially viable to get an expert into the project. And they can say, oh, we need to change this to get our 20% savings. So this is what we have started and where we're going. And in 2019, we estimate we're going to have the finished, fully automated product, the digital employee who will manage your compressed air system for you. And already during 2017, we see that we will have parts of this with our existing customers in the existing projects. This is a little image to give you an idea of how Energize technology works. This is a factory. You can see there is some compressed air system. You have some tank here. You have pipes going, pushing out the compressed air, which basically is energy transport. It's called the fourth utility in the industry. This is the only thing you produce in-house. You buy electricity, you buy water, you buy heat, but this you produce in-house. So our factories, as good as producing compressed air as they are manufacturing cars or flat screens? No, they are really bad at it. So they really need this management help. And that is what we're providing today through projects and software, tomorrow through the automated software and the digital employee. So the measurement data is collected. Now this is a very simple system. In a real system, we might have 20, 30, 100 sensors in the system. So that is collected, totally platform independent. We are a software company. We're not doing hardware. This is collected and put into the cloud servers, where you run the analysis and where you run the visualizations, where you can see what's happening in the factory. And this gives you an idea of where are the bottlenecks in the system that steal energy. What kind of production inefficiencies are there? The compressors, are they really working as they should? Are they doing it optimal, yes or no? What can I change to make them run perfect? How is it used in the factory? That is often the big problem. When people use it freely, they don't follow the plans. Suddenly they're using too much, and the system can't cope with it. And of course, system disturbances. We see that if you have a project like this, and you make the savings and you leave it, after 2-3 months, the savings are gone. There is a problem in the production. They grab the phone and say, oh, you must increase the pressure, and somebody just runs up and do it. And then something starts leaking because the pressure goes higher. So it's a difficult system to manage. Nobody do it today. And especially they have no idea of how it's working. So they can't even make these savings themselves. So that's what we are changing. So the mission we have, that is to become the global leader in this. And the playing field is wide open. There is nobody out doing this at all today. And we're talking 5% of the electricity used in the world. In China, it's even higher. It's about 10% there. So this is a crazy market that is boring. Everyone thought it was boring. Nobody wanted to do it. There's no Silicon Valley guy sitting there making artificial intelligence things for compressed air systems. I mean, why should we do that? Well, we do it, and we think it's a really, really good business deal. Here you can see this is an old system, an old visualization where you can see the energy use. You can see the top is the system before some savings were made, and you can see you go down here in the green where you actually have a much lower production. And you can see these systems are quite chaotic. It's a lot happening in them, so it requires a lot of analysis. You can see the plant here at the left, the typical robot line, where you can have compressed air system everywhere, making the gaps, clamps, holding down stuff. That's a lot of compressed air. Let's go to the business model, because that's also one thing that we think we are a bit unique of. We know that this works. Nobody else has tried it before. So we have a business idea where we basically stand the cost, stand the risk. We go to the customers and say, guys, you know, if your compressed air system stops, your whole production stops. That costs you $1 million each day. So we're going to make your compressed air system safer, better working. But while we're doing it, we're also doing it more efficient. So much more efficient that actually if we split those savings, that's enough cost to cover what we're doing. So you get this for free, guys. So we set up a plan. For example, 4 years. We have contracts for 3, 4, or 5 years now, where we do a revenue split. So let's split it half-half. We made the investment, so we take a little bit more in the beginning. And that's how we do our business. And then once this is over, we know that 2 or 3 months afterwards, savings are gone. So we offer them a continuous monitoring contract, where also this digital assistant comes in, because once we leave a project and put our digital assistant there, we don't need to have any experts costing money to monitor it. Go in there every day and look at the computer. That's not needed. That's not possible. That won't scale. So this is what we do, and this is very attractive to the customers, of course. They get a better system for something that is production critical, they save energy, doesn't cost them anything. A little bit about our customers. These green ones here is the ongoing customers. It says 5. We actually have 7, but 5 is more of the bigger customers. 1 plant each for these customers. We have 2 of these projects that has already gone into the revenue sharing phase, where we do savings and they are paying us, and we got the first payment from one of these customers. These are big customers, big plants. Together, these customers have more than 20 other plants that they have, which we see we could come into after we have finished the first successful pilots. Totally about 10 to 40 million euros estimated savings over the project lifetime. We have 5 more contracts that we secured from November, December until now. Of those, 2 are old customers coming back to us. They could take a second factory. These 2 has more than 20 plants together. And savings are about, over 10 million euro. And we are in negotiations with about 35, 40 customers. Just to give you a scale, one single customer operates 24 plants of these. I wrote 30 million euro here, but that's only the ones where we had the time to go and do a pre-study, and so it's much more. But that's where we are at the moment. To give you a little bit better image of what kind of customers we have, I have some of these that we are running now. We have Beijing Optoelectronics, world's 3rd largest manufacturer of flat screens. We have gotten a second project with them. I'm going to tell you a bit more about that later. Baker Photon, they're making trucks, vehicles. Also have several other plants, 13 plants in China. And we have some older projects with Stora Enso and SSAB. SSAB was actually very, very successful in the part we did. We made 41.8% energy savings in that part of the factory, which we helped them out. And we also, of course, have ongoing discussions to do more projects with them and roll this out. This was kind of pilot projects for both. Recent closed deals, as I said, we have 5 deals. BOE, second plant, much larger. To give you idea of the scale, that's 38 megawatts of compressor power. That's about 20,000 Swedish households of electricity consumption on a yearly basis. So it's a small Swedish city. That's what they're using for compressed air systems. Photon Cummins, it's a joint venture between Photon and Cummins, making diesel engines in China. So we got that through Photons. BBMG, one of China's largest manufacturers of building material. This is cement. And 2 flat glass plants. And we have more in the pipeline, so if you follow us on Enersize, you will see exactly what's coming out when it's coming out. I just give you an idea of how the customer, you see it's a lot of different, it's chemical plants, it's some European car brands and joint ventures in China. I can't name any names here. This metal can manufacturer is these customers with 24 plants. They make metal cans and metal rods and other metal stuff. They have 130,000 employees in China. So it's quite big customers we're aiming for. And these ones, the other ones are those that we are quite close in closing deals with. Then we have this in the bigger pipeline that we're working with. Sometimes things go very fast in China, and sometimes these guys just run forward in the queue and we get the contract directly from them, even if we haven't had the negotiations for such a long time. Well, that's a short presentation of us, and as I said before, we are planning an IPO in Stockholm just before the summer, and it's Sedermera who is managing it, and well, that's I think it's a great opportunity to come and invest in us, so you're all welcome to do that. And now I think we have some time for some questions. I don't know if I ran out of time or kept it. I'm fine, that's great.
Mig again here. Well, thank you, Christian, for now. And please have a seat.
Thank you.
We'll make it a bit more cozy for the question session. If any of you have questions, briefly think about them. I'll ask a few questions first, and then we'll move on to the audience. You talked a lot about your deals, contracts with the big Chinese customers, one of the world's largest flat screen manufacturers. Can you tell us some more about what has been the key for you to landing projects of that size?
So for landing it, well, I mean, it's a really attractive offer. I mean, our strategy has been to go towards these customers. So it's basically of going to them and giving them an attractive offer, and they take it. It's usually, we have learned a lot. The first contract we negotiated, it took over 2 years before we could set our foot in the plant. Now we learned, so I think the lastest one was 2 months or something like that.
Do you have a team out in China?
Yeah, we have a team in China, and we have Sami who is very present there, so he do his stints. So it's like 2 weeks China, 1 week Finland, 2 weeks China. I'm doing that for 2 years or something like that, doing great work.
Mm. Is that your main focus now, your main market focus, or are you looking to the States or elsewhere?
No, with China we have this really huge opportunity, which we will continue to expand and explore. But we will also want to be in Europe as well, both to balance the Chinese market, and also because we have a great progress here. We now got Scania and we got Dürr with us, so that opened up the market. So that will something we'll definitely focus during this year.
Do I get it right in that you have commercial partnerships with local players on the Chinese market? How do these partnerships affect your revenue streams going forward?
Basically, I mean, it's finding a good deal for everyone. And they're doing a lot of footwork in the early sales processes. They have the network connections. They know how to get into the companies. So, of course, they have a minor share. One of the partners we have, they're also involved in the post-process. So they are also doing the installation of in the plants and that. So, of course, they get a little bit bigger share. But I think we have a good balance there with the partners. So we're all happy.
You said that your product is sort of unique. No one else is doing it. So what is the full market potential? Yeah,
I mean, as you saw in the presentation, it's a lot of zeros. I don't know, it's billions of dollars, billions of euros. And it's the better our software will get, the more market penetration we can have, because we can go to smaller plants, and we can go to more distant distributors. The more autonomous the software is, the more it can run by itself, the easier it will be for us to penetrate the market.
Okay. So a few questions from the audience up here. We have a mic. Usually works.
Is your product protected by patent, or how do you prevent the product from being copied by somebody else? Is
Yep.
it a risk?
No, it's a relevant question, definitely. Today, I mean, we're running in a kind of modern way. So we're running it on cloud servers, and so we actually don't give the product to the customer. We're running it by ourselves. So it's not that we give out something that could be reverse engineered. What is running on our service and how we run it is like a kept secret. And going forward, I think we will file a couple of patents for the key parts of this. But at the moment, we don't feel we need it. We think it's better to explore the technology. So we actually, when we file the patents, it's exactly the right thing that we file and not something that we thought a year earlier was the right thing.
Another question down here.
How big is your cost base, and what was the market cap of the company when you did the pre-IPO funding?
Yeah, we'll release that when it comes to the market cap and that with the prospectus when we go for the IPO. And cost-wise, it's difficult to say because we're expanding all the way. So basically, I don't have like a burn rate at the moment. Our target is to go break even doing the project business during this year. So basically, the funds we got into IPO, we will use them for market expansion, also for doing more proactive installations. Where we take the risk. So the more plants we can put our system in, the more customers we'll get half a year later. So that's what we're going to put it in. But the basic project business should be cash flow positive during 2017.
Yeah, you mention it briefly now, but get more into why you're going for the IPO and how much money you're looking to raise and how you're going to spend it.
Yeah, exactly. I mean, money-wise, how much we give, also coming into the IPO prospectus. I don't want to outrun that by saying it now. And spending of that, I would say like one third about for technology development, and 1/3 for accelerating the market and also accelerating the proactive sales. And then the other 1/3, I mean, that's for different things that we have in mind. Won't dwell into them now, but yeah, there's a lot of different small things that we want to do.
And do you have a timeline regards to your IPO? You're looking for an IPO on Nasdaq in Stockholm.
Yeah.
What's the timeline from here?
Yeah, I mean that's never sure until it's sure, right? but late spring, early summer. So before you all go on vacation, you should be having a nice bunch of Enersize shares on your account, I hope.
You're a Finnish company. Why did you choose Stockholm for your IPO?
I mean, we are partly owned by Clintic Invest, who is listed both in Finland and in Stockholm, and we think that what Enersize do going into the industrial. I mean, it fits very well into the understanding of the Swedish market, where we have a lot of big companies that have gone out from Sweden and conquered the world, especially in the industrial segment. So we think it's a very nice fit for doing that.
Risk is an important thing when you're going for an IPO, when you become a listed company. We've been into one of them already, being a player on the Chinese market.
Yeah.
A country almost defined by companies copying each other.
Yeah.
How is that the biggest risk for you as you see it?
I think, I don't see any big risks. I think it's you always have lots of smaller risks, and then you need to manage them. I mean, that's one reason why we go to the European market. If you look at the market and the copying, you also need to have some. I mean, it's not just about copying the technology. You also need to see how you go out on the market with the business model. And as long as we keep the lead, I mean, we collect data from so many big factories. How do you copy that? You can't do that, and that's what our technology and what we do and how we analyze is based on. Mm-hmm. And that's also, I haven't talked so much about competition because there really is no one. It's a very fragmented market. And if you look, the only big players are like the compressor manufacturers. But they don't go to a big customer in China and sell like a complete compressed air system. No, they sell compressors. Then you buy dryers from someone else. And you have a local entrepreneur buying the pipe work from someone else and installing it. And this is also one reason why the systems work very poorly, because it's so many people. There's no one doing like a full project installation who really have the competence. And once you start doing energy savings, you go to the compressor manufacturer and they say, oh, great, we can sell you a new compressor for 1, 2, 3, 4, 5 million euros. So that's how the business works. So it fits us very well. So yeah, I think that's a little bit of managing risks, taking the opportunities, staying in the lead.
More questions from the audience? Down here.
My name is Ole Vansen-Hjort. I'm presenting a venture company, and I'm a financial analyst
There we go.
as well. But we would like to have, when we look at new companies, some solid figures. Do you have any figures for sales, EBITDA, as a net result for your company?
Yeah, of course I have. But we're releasing a prospectus before we go doing the IPO, and all that kind of information. We won't go out with that until we reach that point. So we go out with that in the prospectus, and of course, all annual reports and stuff like that.
When will that be released?
Yeah, I mean, talking about, I don't have the exact date here. I have to catch one of the Sedermera guys, but within 2 months, if I say that. So March, April. We have April, yeah.
More questions?
Yes, hello. My name is Alan Kern. I'm from a little investment company. I would like to ask you about, don't you see any so-called unsecurities in terms of your contracts? It must be very hard to estimate the savings for a company, especially a company which is maybe partly changing the production process. So what are your fixed points, and how do you see your revenue stream from your business model, which is a sharing, cost-sharing business model, as I understand it?
Yeah, I mean, that's absolutely a challenge. How do we measure it? How do we prove the savings when production change? So I think that's something that we continue to develop. That's a strong focus for us to be better at. I think we're good enough at the moment, but I think every way we do it better, you're good enough, but you always have to have a margin so the customer thinks it's a good way to do it. But the more we measure, the better we analyze it, the better we get at that one. So it's a very relevant question, and I think we have a good grip of it today, and we're going to just getting better and better at that. And production change is also we have opted out on some customers because we know that the risk have been too high that they go into, steel industry just going down, for example. So we said, no, this is too much cost for doing this. But that said, our investment cost to go into a company is really, really small. So we can usually take that risk. I mean, maybe it's 5% of the possible savings. It's what's our initial investment cost, with some actions. If you only look at installing our system to get a grip of it, we can come down to 1 or 2% of those savings. And then it's worth taking the risk if you do it in a couple of plants. So that's kind of our strategy. Of course, manage the risk and then install the system. And if we see that the savings that can be made easily is big and they don't affect so much from the production, go for it. If not, well, skip it.
I'll let you finish off with a few words. Why should the people in this room put their savings, their money in an investment in Enersize once you're IPO?
Yeah, I mean, investment, first of all, it's how much money will I get back? And I think this could be a really good case. I mean, I really believe in it. I think it's a great opportunity on a market that is huge and totally virgin. And then, of course, you need to have fun while investing. And I think there's a lot of happening. It's a lot in China. It's a lot on the software. I mean, it's a lot of things that are really happening right now. The world is changing. We can see that from solar power, from autonomous vehicles. And we are bringing this one into the plants. So I think the journey could be well worth it. And of course, with a nice, hefty upside on the financial side.
Christian Merheim, thank you so much.
Thank you very much.